IMF forecasts weaker economic growth. Thank you for joining us for another Bank of Cardiff newscast. The head of the International Monetary Fund, or IMF, is forecasting interesting times ahead as weak growth over the last 12 months shows no sign of improvement. Christine Lagarde warned of a continued slowdown, especially in the large emerging market countries, that will cut global growth to its lowest level since the profound recession of 2009. Forecasts due to be published by the IMF in October will show global economic activity lower than the 3.4% recorded in 2014. During an address in Washington, Lagarde said global growth will likely be weaker this year than last, with only a modest acceleration expected in 2016. Other issues, including the refugee crisis in Europe, are adversely affecting global affairs. Lagarde said the prospect of rising interest rates in the United States and China's slowdown are contributing to uncertainty and higher market volatility. There has been a sharp deceleration in the growth of global trade, and the rapid drop in commodity prices is posing problems for resource-based economies. Well, emerging markets have attracted a lot of inward investment in recent years, especially from those looking for higher returns than have been on offer in more established economies. But there are concerns over the impact of excessive borrowing and high debt exposure in sectors which are susceptible to the highs and lows of the economic cycle. There is some evidence of a small improvement in developed countries, according to Lagarde, but this has been offset to a large extent by the fifth year of declining growth rates in the emerging world. India remains a bright spot. China is slowing down as it rebalances away from export-led growth. Countries such as Russia and Brazil are facing serious economic difficulties. Growth in Latin American countries in general continues to slow sharply. Lagarde claimed that growth potential was being affected by low productivity, an aging population, and the lingering effects of the global financial crisis. She said financial stability was not assured, despite attempts in recent years to make the system safer, and pointed to global growth as disappointing and uneven, with medium-term growth prospects weaker and the worrying prospects of a new mediocre being established. High debt, low investment, and weak banks continue to burden some advanced economies, especially in Europe, and many emerging economies continue to face adjustments after their post-crisis credit and investment boom. The Federal Reserve is expected to raise interest rates this winter, and the IMF is advising emerging market governments to prepare themselves for sharp rises in corporate failures as businesses struggle to meet increased borrowing costs. This, in turn, could create problems for banks, who may need to restrict lending to meet their debts. Shocks to the corporate sector could quickly spill over to the financial sector and generate a vicious cycle as banks curtail lending. Decreased loan supply would then lower aggregate demand and collateral values, further reducing access to finance, and thereby economic activity, and in turn increasing losses to the financial sector. While urging the creation of a, quote, policy upgrade to meet the challenges, Lagarde advised that most advanced economies, except the United States and possibly the UK, would need to maintain economic stimulus at its present rate. She urged the Eurozone to tackle non-performing loans, totaling around 900 billion euros. This is one of the major unresolved legacies of the financial crisis, she says. By removing the NPL build-up, banks would be able to increase the supply of credit to companies and households. It would enhance the potency of monetary accommodation, improve the outlook, and bolster market confidence. The IMF published the warning as the world's finance ministers and central bankers prepare to gather for its annual meeting in Lima in Peru next month. Join us later this week for another Bank of Cardiff newscast. And remember, all of our newscasts are available on our website. That's www.bankofcardiff.com/newscasts.